Chatty ho! Whoa, 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 whoa. I'm trying to figure out this damn camera thing here. Okay, Cameron here with Emerson Property Management. Every week I bring you tools, tactics, strategies, lessons I've learned, things that helped me build up a sizable rental portfolio about 2 years and now manage that portfolio. Guys, today I want to talk about net worth. Something interesting, I don't know how much you guys deal with net worth, or even if you track it. I've tracked it for a while because Mint did it automatically for me. But I really like it. Sometimes I say I really like it, like I'm in love with it, but it just shows you a good gauge of if you have a lot of debt, but you have a lot of assets, it's okay because your assets, as long as your assets overcome your debt. So let me step back here. Net worth. What the hell does that mean? Assets minus liabilities. Assets minus liabilities, right? Equals your net worth. So if you have a $100,000 house and you have $75,000 in loans against that house, and that's it, that's all you own, your net worth is $25,000. 100,000 asset minus 75,000 liability, 25,000. It doesn't take anybody too much brain power to figure that one out. However, tracking this, I think it was the Millionaire Next Door or one of those the finance books, one of the old school ones said you want to track net worth every month, every year, whatever, every quarter. Get something that you're comfortable with. Like I said, if you log into Mint, you can put everything there and it will track it all for you in real time. So you can see as soon as you get your paycheck, your net worth goes up. You see rent comes out, it goes down. You buy a property, it goes up every year, your net worth's growing and growing. The stock market goes up, your net worth will grow. So all your assets, as long as they continue to grow, are going to add to your net worth. So what do you think? I saw this study, this chart. It's from Wallet Hacks. This was the average net worth by age, or excuse me, the median. So again, I explain this all the time, but it took me a long time to figure out what the difference is between median and average. Average. If Bill Gates walks into a room with 10 people, the average, any random people off the street, the average net worth in that room is going to be about $10 billion. If Bill Gates walks into a room with 10 people, just average Joe Schmoes, the median net worth might be a couple 100,000, right? Because the median net worth, it's all low to high, and you take the middle number. So Bill Gates is going to have $100 billion. Everybody else is going to have in the hundreds of thousands. So if you do the average, those at the top can really skew all the numbers. So that's why the median is actually the better number to look at. So if you're under, we've got three categories here. Under 35, 35 to 44, 45 to 54, 55 to 64, and then I'm just going to do 65 to 69. Okay, so actually that's 5 categories. So, okay, net worth, you guys got the assets minus liabilities, less than 35, 35, 44, 45, I can't read it backwards, whatever those are, you see them. Okay. What do you think the median, now most of us, if you guys are watching this, the odds are that you're a millennial, so you're under the age of 40. So you're probably falling in that, maybe you're just graduating school, college, what have you. You're probably in this under 35 bucket. Now, if you are, what do you think the median net worth is for somebody under the age of 35? Take your guess. My guess is it's lower than you would think, $10,200. So what that means is you graduate school, let's say with 100,000, let's use some realistic numbers. You graduate school with 50,000 in student loans. You have some investments that you've been making, and they're worth $60,200. 60,200 minus your 50,000 in student loans gives you $10,200. That's the median. You stack them all up. That's the middle number, 10,200. To me, that is low. If you're 35, you're in your career, that seems extremely low to me. I don't know, maybe you guys have a lot higher, maybe you have a lot lower, I don't know, but if you have assets that are working for you, that number should be so much higher. So let's go into 35 to 44. So this would be Gen X or whatever the hell the next generation is, I forget. You'll see a significant bump here. 68,400. And I'm going to write the rest of these because really the rest of these are pretty, to me, insignificant. The one that I really don't like is our generation's number. And the reason I say that is because it's the conundrum. And when I say conundrum, I mean you have to invest early to take advantage of compound interest. So we want to invest and have as much money put away at the beginning of our lives as we possibly can. Student loans suck, car loans suck, mortgages suck, but you have to have some of those things to be able to increase your earning potential over the years. But you've got to have assets that grow in value to really add to these things. So 10,200, like I said, obviously this 65 to 69 is almost $250,000. That also seems pretty low because if you guys think about retirement age in your mid 60s and you only have $250,000, that's less, $223,000. You're probably living off about $8,000 if you use the 4% rule. Social Security, maybe another 10. You're living off 18 grand. I don't know about you guys, but I don't want to be eating cat food when I'm 65 to 70 years old. Although probably some of that old people fucking, what do they call it, Golden Corral shit tastes like, probably cat food probably tastes better than that. Anywho, the reason I think this is important, and I think you guys, if this tells me anything, something I want to try to convey is, for us, having less than 10,000 or a median of 10,200 in net worth means we need to buy more assets. We need to stay out of debt, credit card debt, all that. We need to buy more assets because our assets, if you buy a $100,000 house and it goes up 3%, that $100,000 house just made you $3,000 every year. You didn't have to work for it. You didn't have to do anything for it. You got $3,000 that year. That added to your net worth. You buy 2 houses, 3 houses. Maybe you get an appreciation area, SAL appreciation goes up 10% one year. Now you just made $10,000 on your $100,000 house. If you buy those over time, you cannot help in your 30s, late 30s and 40s to be rich and have a median income well over 60-some thousand. I understand there's a lot of student loans and stuff, and I was fortunate to be able to pay for or pay off my student loans, but it is a burden. But you have to buy assets. You put money in the stock market, it goes up. You put money into assets, hard assets like real estate, and over time, when you use leverage, that stuff will really, really increase. I put another video together on why a lot of the millionaires have stocks and real estate. If you guys check that out, that might explain some of this, but we as millennials have to get into the real estate game. We have to start owning assets. I have a bad taste in my mouth after what happened in 2008. I don't trust banks. I don't like these big fat executive cocksuckers who make all this money and make 40, 50 million bucks a year and then creating fake accounts, white collar crime. Nobody goes to jail or prison. They just pay a fine and they're out. That's bullshit. But we have to invest in the stock market. They cause the stock market to collapse. It sucks. I don't think it's fair. But if we don't own stocks and real estate, we are going to get left behind. We cannot want to live off of $223,000 when we're retired. That might sound like a lot to some people, but I'm telling you, at the 4% rule, you're living off eight grand a year. And if you factor in Social Security, you're living off of between 15 and 20. 15 if you had good, maybe 25,000 total a year. So buy assets, get rid of debt, start early, guys. That's what the secret is to getting this where it needs to be. Hope that was helpful. If it was, let me know. If it wasn't, let me know. Guys, I really appreciate doing this. Comment below, share it. And then if you have anything else, anything I can help, I can put on another video for you guys. So thank you. I'll see you all next week. Cheers.